So what do you see in terms of, you've got gambling, bricks and mortar gambling, but then also, Tilman, you're, I believe, the largest shareholder in DraftKings. What are you seeing there? That stock has sort of traded sideways for the past year or so. So what are you anticipating? Is there a catalyst there on the horizon?
Well, I think what's happened is that everybody stopped this free spending everywhere. I think BetMGM, Caesars, DraftKings, all the huge players, I think you're going to see profitability sooner than we all thought we were going to see it because they were losing so much money. I wouldn't be surprised if all of them are making money by the fourth quarter of this year. So I'm excited. I love owning all the DraftKings that I own. I'm very high on it, just like I like being one of the largest shareholders of Wynn. I'm very high on it. So I guess I'm hot into the gaming stocks right now.
Does them making money in the fourth quarter of this year, does that mean that you don't see a recession coming, or do you see a recession people are going to game through? I'm just wondering, you must have a very good view of where we are heading right now.
Well, it's kind of funny what you said, but, if we might go into a recession, why would online gaming stocks do well? Because people are going to be sitting on their couch, and it's very easy to make a sports bet or make an online bet in a few states that it's available. And just like during COVID, when people were sitting at home, that's when these companies really did well. So I don't think they're like other companies. I think that they can plow right through a recession where the bricks and mortar, like my Golden Nuggets or the Wynn, could struggle a little bit with the consumer. But the entertainment dollar of gaming always seems to be one of the last ones not to get spent.
I got two more questions for you, Tilman. In terms of your forecasting, though, are you baking in a recession? Is that what you see based on what the Fed is doing, based on what we've gone through with the banking crisis?
I'm not baking in a recession. What I'm doing, though, is that we watch everything extremely closely, and we're not spending the new CapEx or new acquisitions or new building quite as quick as we might do it. I'm watching projects. I don't think you go do a major project when interest rates are still ticking up, and we really don't know what the Fed is going to do. They might pause and then 6 months later raise it another half a point. We have no idea because there's such a lag, and they had such a huge lag in starting this, and I think they might have a huge lag in slowing it down. And when people talk about them lowering rates by the end of this year, that's just ludicrous to me unless we go into a deep recession. And that's one thing we don't want to happen, is to go into a deep recession. Remember, we just started raising rates 18 months ago. Time flies.
So you're watching everything. Are you watching the Washington Commanders? Are you going to make a bid for this franchise?
I'll be flat out honest. I made a bid on the Washington Commanders for $5.6 billion. That's the value that Forbes had them at. And at some point, you got to draw a line in the sand on everything. And that's where we are. If they can get somebody to pay them more than that, good luck to them. That's all I can say. I own a franchise, so I love them selling for a lot. But at some point, I don't think $6 billion is the right number.
Well, though, Tilman, the funny thing about sand is that you can sort of wipe it and then draw another line. So line in the sand isn't really a hard line. And there's a lot of leeway between 5.6 and 6 billion.
You know what? Everybody that's watched me do business for the last 40 years knows when I draw a line in the sand, I'm done. So I'm here. I can close, and that's the way it is.
Okay. Tilman, always great to see you. Thank you.